Right. Good afternoon, comrades. Good afternoon, workers of Zimbabwe. Good afternoon, citizens of Zimbabwe. And welcome to the Worker Dialogue. We apologize for the late start. We had a technical glitch and we are very sorry about that. And we welcome you to this segment of the Worker Dialogue, where we are looking at possibilities for workers, possibilities for the majority of citizens and working class citizens to invest or to participate in the Zimbabwe Stock Exchange. And we are fortunate today that we have Kudzanai Sharara, who is a financial markets analyst. I would want to allow Kudzanai to give a brief background of himself. And welcome, Comrade Kudzanai. Welcome to the Worker Dialogue. This is a platform where we discuss issues of importance to workers. We look at issues across all social and economic policies, and we try to discuss issues that inform the Zimbabwe Congress of Trade Unions leadership, issues that inform workers in general. We also use this platform to engage various people with various ideas, and also to engage policymakers and share views and ideas on various policies. So it is our pleasure to host you, and welcome to the Worker Dialogue.
Thank you, Mr. Mutasa, and apologies for the technical glitches. I would have loved the workers to see the person that they are talking to. Unfortunately, technology was not on our side today.
Right. Thank you very much. I think it still works well. Let's go straight to the issues. The working class is facing many challenges. The rate of people who are working but are poor is increasing across the globe, in the continent and locally. In here, the majority of the people that are going to work, whether formal or informal, they are working, but they are working poor. So working poverty is increasing, and the amount of salaries that workers are earning in real terms is going down, despite the fact that productivity is increasing, despite the fact that capacity utilization, as we have witnessed from the CZI research, has jumped by almost 9%, and it's expected to move from 47 to around 61%. Despite all those effects, the working class is still suffering, with the majority of them failing to buy basics like food, paying for rent, paying for school fees, and even buying clothes. It's very few people who are now still buying brand new clothes. Men are buying second-hand clothes. And the working class is also witnessing a widening gap between incomes in terms of wages and profits, the dividends and the capital gains. So there is a discussion around the working class. How can we address some of these challenges? And today we want to look at the Zimbabwe Stock Exchange in particular, where we have seen the bosses, where we have seen the investors and the shareholders hedging against inflation, but the working class salaries are never increased by an inflation rate or a rate above inflation. We've also seen dividends, many companies paying good dividends within our context. So we want to look at this topic and see how workers can also, whether there's a possibility for workers to also participate in the Zimbabwe Stock Exchange, and what are the class contradictions, what the ideological contradictions that are there. Do they measure up to the benefits that workers will benefit? And we're not just looking at workers in their individual capacities, but also in their collective capacities as trade unions. So, Kuzi, may you introduce yourself and talk briefly about your background, your areas of specialization.
Thank you, Mr. Mutasa. Kudzanai Sharara is, I'm a financial analyst or equities market analyst. My brief is to analyze how companies, Zimbabwean companies, as well as the economy at large, how it is performing, and present the research to decision makers, policy makers, as well as investors in terms of how the economy is performing, how companies are performing, where there are opportunities for growth, what are the risks that are involved in the that are there or present in the economy that could also affect the companies that are operating in the Zimbabwean economy. And obviously, when companies are affected, it also filters down to the worker. And so for the better part of my working life, I've been working in the financial services sector, and between 2010 and until 2017, I was working as the head of research for a stockbroking firm called Linton Edwards Stockbrokers. And I was my brief there again was to analyze how the economy is performing, as well as also analyzing how companies are performing, and also giving recommendations in terms of investment decisions that individuals, institutions, as well as the pension funds, in terms of how they can also participate and invest. And probably before I forget, I might also highlight, or I must also highlight to say, most pension funds in Zimbabwe, including NASA, which obviously they are supposed to take care of workers upon their retirement. Most of them, they are invested on the stock market. They are actually investors in the bulk of their funds. I think the last time I looked at the reports from the pension funds, about 40% of the contributions that we send to pension funds, 40% goes to the stock market. But of course, because they are now institutions and there are a lot of people involved, administration, the costs involved probably they result in some of the gains that are made on such markets to be eroded, and they don't filter down to the worker. And then, so having worked at Linton Edwards as a head of research, I was then approached by one of the leading organizations in the country, that's Zimpapers. They wanted to start a project which resulted in the formulation of a newspaper called Business Weekly. But my mandate there was to introduce the investment aspect, the investment world, to the mainstream media, as well as to the generality of the public. As you might have known in the past, the stock market is known by most people to be a preserve of a few, a preserve of the elite. A lot of people think that it's very difficult to be invested in the stock market, and they also think that it's not possible for individuals to invest on the stock market. A lot of people also do not understand the how-to of investing on the stock market. So that's what we wanted to introduce at Business Weekly, and we are still working along those lines to make sure that even the generality of the public can also understand that as individuals, they don't have to wait for their pension funds to invest, but as individuals, we can also invest, and then you can then make your comparisons to say, okay, my pension funds, they invested in the stock market, and these are the returns, or these are the pensions that they are giving us. But I also invested, and these are the returns that I'm getting from the stock market. And then it's easier even in future to judge, to say, did the pension funds doing enough to make sure that workers after retirement, they can live comfortably. Those are some of the things that you can then look at when you're also investing in your individual capacity, as well as in investment clubs. And so in my, just to finish, apart from my professional duties where I'm employed, I'm also a strong advocate, or some would say an evangelist of stock market investment, because having started my investment journey a bit late in my life, I've realized that a lot of people are also in that predicament where after school or after university, that's when they realize that there's something called the stock market, but you can actually start investing at school before you even start working. Even for our children, we can start investing for them. When your child is in primary school, you can actually start the investment journey. When they go to secondary school, you might not even take a cent from your pocket. You just use the investment that you would have made along the years to pay for their education.
Now, so that's Kudzanai Sharara, the financial markets analyst, and we are glad that he has taken time to be with us. There are many things that we take for granted, and there are many things that we ignore, and we need to awaken as the working class and look at all areas. But Kudzanai, you have spoken a lot about many things, but I like the angle that you have brought around, which is the pensions. And I think we'll reserve a whole session of another dialogue to look at the pension, especially when we are going to look at the Justice Smith's Commission of Inquiry, which is going to be our next dialogue session. But let's break it down to us, to our level, to the lay person. You have spoken about the equities market. We want to know what the equities are. You have spoken about the stock exchange, Zimbabwe Stock Exchange. So what is the Zimbabwe Stock Exchange, and how does it operate?
Thank you. So the Zimbabwe Stock Exchange is a financial market that was established for the primary reason so that companies can raise capital. You know, when you have got your operations and you want to expand, you want to make other acquisitions. Sometimes you have to go to financial institutions like banks to borrow money so that you can expand your operations, or you can make some acquisitions. However, we all know that getting a loan is expensive. It's an expensive way of funding your business. So the stock market is there now for companies to come and raise money in exchange for equities. So this is Sharara enterprise that needs to expand, that needs to raise additional capital for working capital, even for acquisitions. Sharara Enterprises, I own, or Sharara owns, Sharara owns 100% of that entity, and but he is looking for capital. He then goes to the Zimbabwe Stock Exchange and do what is called a primary listing through what we call an initial public offering. This is where you are now going to members of the public to say, I've got my enterprise, Sharara Enterprise. I'm looking for capital, and in exchange of capital, I can give you shares in my company. I'm willing to let go about 40% of the shares in my company in exchange for money. And those potential investors, even workers, they can then look at that, and if they believe that my company has got a future, my company can grow, they can then choose to invest in my company. An individual can buy 10 shares, 100 shares, 1%, 5%, depending on their financial muscle. You can buy, so on offer, I would have put 40%. So you can then, everyone else, people participate, and they give me the 40 million, for example, that I'm looking for in exchange for 40% of my company. So that's the stock market. The primary reason is for companies to raise capital, which is in most cases cheap capital as compared to getting loans from the banks. However, after companies have listed, the shareholders have got an opportunity to say, well, I bought the shares of this particular company yesterday, or last week, or last month, or years back. I bought these shares, but now I'm no longer interested in holding them, or I now need some money for other to fund my other interests. Then you decide now to sell those shares that you bought from Sharara Enterprise. You can now sell them to someone else who is also looking at buying into Sharara Enterprise. So that's how it works. People every day, they make decisions to say, no, I was invested in Sharara Enterprise. Now I need capital to fund my own business. I then sell my shares to someone else who is looking for an investment home for their money. We all know that with inflation, money is eroded. With currency depreciation, money is also eroded. But however, with the advent of a stock market, for example, you can actually invest there to preserve capital. I'll talk later on about other benefits of being invested on the stock market. But for now, that is the stock market, where companies come to raise money, and then individuals will also come to invest for capital gains. Capital gains is whereby if you buy your shares at $1, after some days, some weeks, some years, the shares will be worth maybe $50. So you would have made 50% profit on those shares. And then you can decide to sell. Someone else is still seeing value in that company. Even at $50, someone is thinking that with the way this company is structured, with the way this company is run, the share price might even go higher than the $50. It might go even to $3. So I'm willing even to buy these shares at $50, and you buy those shares. So every day there is the buying and selling of shares, depending on people's financial objectives and financial needs.
Thank you very much, and thank you, comrades who are following, and you can pass your comments. You can also ask your questions. We are in the worker dialogue, looking at possibilities of workers and unions to invest on Zimbabwe Stock Exchange, and we are hosting Kudzanai Sharara, who is a financial markets analyst, and is assisting us to unpack it, to understand the Zimbabwe Stock Exchange. So let's look at it. You have pointed out that it is a platform where you can also, a market where you can also hedge against inflation. And looking at our a specific context where we have got economic unpredictable economic cycles, how has the Zimbabwe Stock Exchange performed compared to other stock exchanges, or compared to other investment options in the country, say during the hyperinflationary era and the most recent period?
Thank you for that. So starting from the hyperinflation era, where, for example, if you were to remember, there was a time when you are going to work in the morning and you are asked to pay $1 for your transport fare, and then when you are going back home in the afternoon, you are also the fare will be now $2 or even $3. So prices were going up at a faster, very fast rate. But however, on the stock market as well, a similar scenario was also happening, whereby you could, in the morning, shares, you could open the market with shares valued at $1, but by the end of the day, those shares will be valued maybe at $5, which means that the stock market at that time was the share prices were appreciating at a faster rate than what was happening to prices of other basic goods and services. So the stock market, it means that the stock market was actually preserving value for those who were invested. The stock market was also giving some kind of growth, because if inflation is at 5% and the stock market is performing at a 10% rate of increase or gains, it means that you are not only preserving your capital, but you are actually making a bit more than what you would have put on the market. So that's what was happening during the hyperinflation period, and we saw a lot of people rushing to invest on the stock market, until in 2008 the authorities decided to close the stock market, because they thought it was now fueling inflation, because of information, the spread of information. Everybody was now buying shares because of word of mouth. I'll be for example, when reports come out and they say yesterday share price of this particular company was at 10, but it closed the day at 100. A lot of people got interested in also buying into shares, and this, because of the interest of many more people, share prices continue to go up at a faster rate than inflation. And then in 2000, and after the ban in 2008, the stock market was reopened in February 2009, and we're now trading in United States dollars, which means that those who had bought shares in the Zimbabwe dollar era could now sell those shares in US dollars. And those were also seeing the growth, because as the economy started to recover during the GNU, it means companies that were struggling during the hyperinflation era, they also started to grow. They also started to record huge profits, and their operations stabilizing, some of them reinvesting and into new equipment. We saw a lot of companies investing in modern technology as we were during the dollarization. The dollarization era. The stock market as well started to perform, because as we started in 2009, the stock market was valued at around I think it was just above, just below $2 billion. But as we got to the height of the GNU era into 2014, into 2015, the stock market was now valued at about 5 billion. So we moved from being valued at 1 billion in 2009 to about 5 billion in 2015, which means that was tremendous growth. You're looking at yourself as having invested $1,000, and then in 5 years' time, you now had $5,000. So that was significant growth. And then from 2016, we started to see after the introduction of the bond notes, we all know the stories there. The stock market obviously reacted to that and repriced itself to make sure that the gains that we're seeing, or the value of shares, were not eroded by hyperinflation, which was not also creeping in. In fact, the biggest challenge was now currency depreciation, and the stock market was also repricing itself to cater for that currency depreciation. So it remained giving investors some value until 2019, when government announced that all transactions in Zimbabwe, including trading on the Zimbabwe Stock Exchange, was now going to be done in local Zimbabwean dollars. So you had a stock market which was valued at, let's say, 10 billion in 2019, but after that, in US dollars, 10 billion US dollars in 2019. But after that announcement of change in currency, change in transaction currency, we saw the stock market now valued at 10 billion Zimbabwean dollars, which, if you converted into US dollars, was now an undervaluation. But because it's a stock market, prices investors will know that this company is now undervalued, and share prices will start going up. And that brings us to 2020. What happened in 2020 in terms of returns on the stock market? The stock market, in terms of market capitalization, gained by 900% on average. When we say 900% on average, we are also considering that there were companies. There is one of the biggest financial institutions in the country. It actually gained by 12,000% in 2020. So we are looking at somebody who invested $100 in January 2020. If they had invested in that particular company, which gained by 12,000%, if they had invested $100, they ended the year with about $12,000. However, it was not all companies that performed that much. That's why we are using an average of 900%, because as we looked at other companies that only gained by maybe 100%, some by 500%, some by 1,000%, on average, it became 900%. Now we also know that there was also inflation during that period. There was also currency depreciation during that period. So in US dollar terms, were there any gains on the Zimbabwe Stock Exchange in 2020? The answer is yes. That 900%, when you then convert the market capitalization, or the market value of the Zimbabwe Stock Exchange, which was now at $317 billion, if we convert that using the official exchange rate, or even the alternative exchange rate, which we know as the parallel market exchange rate, even if we convert using the parallel market exchange rate, the stock market in US dollar terms gained by more than 100%, which means that somebody who put $100 in January 2020, by the end of December 2020, their money had doubled. I know Zimbabweans, we are used to buying something in South Africa and then you double it in a day, but investing in a day, you just go across the border, Messina there, you buy something for 100 rands, you come here and sell it for $100. And a lot of people, when you tell them that the stock market gained 100% in US dollar terms, to some people they say that's not much. But forgetting that this is what we call passive income. All you did was to go and invest, buy your shares, and you went back home and you sit at home until the end of the year. You had doubled your money. Again, there are issues of risk. I know a lot of people who have tried to venture into, for example, poultry production, doing chickens, and because of some diseases or whatever happens, they lose everything. Or some have gone into farming, and then there's drought. You've invested a lot of money into farming, and then there's drought, and again you lose all your capital. So there's risk everywhere. Even in the stock market, there are risks that are there. But the beauty of the stock market, unlike in farming where you go and farm, and but when there's drought, you lose everything. In the stock market, if the market does not perform, you are still a shareholder of your company. You remain a shareholder and then sell your shares when the market recovers. So that's the beauty of the stock market. Remember, I said that valuations from 10 billion US dollars to 10 billion Zimbabwean dollars. However, the market has since recovered. So that's the beauty of the market. Let's now come to this year as I conclude on this one. Let's come to this year. How is the market performing? Since the beginning of the year, in US dollar terms, the Zimbabwean Stock Exchange has gained by more than 50%, which means that somebody who put $100 in January, by now they have got 150. In fact, if they had sold around end of February, their gains was actually 75% in US dollar terms, 75%. But the market has since come off, as markets do. They have got cycles where, for example, when there are a lot of people taking profits, we know we opened school recently, we opened businesses recently after the lockdowns, and some people who had invested on the stock market would be selling some of their shares so that they can now fund school fees, fund their businesses as the economy opens. So the market was coming off for I think last week and about last week, but now it has changed again. But so far in the year, it has got a 50% return in US dollar terms, which is higher than inflation. Inflation, we saw the reports yesterday, month on month, because I know the year on year is at 240% as of yesterday. However, when we are looking at the stock market this year alone, we are now looking at the month on month inflation to say, where is the month on month inflation? By how much? For example, I'll give you an example. In February, the stock market gained by 15%. What was inflation in February? It was around 3%. So you can see that you have managed to not only beat inflation, but you actually done 3 times what inflation did, which means that if inflation increased the prices of bread by 5%, the price of your shares went up by 15%. In January, it was even better because the stock market gained by 75%. Inflation was at 5%. So someone who invested in the stock market, their investment of $1 went up by 75%. So they ended up with $1.75. But someone who had $1 to buy bread, they had to increase by 5% for them to continue to buy bread. So you can see that the stock market is at the moment beating inflation. No matter what is happening to inflation, the stock market is doing better. We also know that even using in terms of currency depreciation, we also saw that even in terms of currency depreciation, whether you are using the parallel market rate, it has been around between 120 and 125. And then on the official, it has been between 82 and 83, which means there's stability. Whether you're using parallel market, it's stability between 120 and 125. It's stable there, which means that if you invested on the stock market, your returns are real returns because when you invested, you could buy your US dollars at 120. If you are selling now 3 months down the line, you are still buying your US dollars at 120, and yet you have gained 50%. So I think in brief, that's what I can say.
Oh, thank you very much. And to those who are just joining us, welcome to the Worker Dialogue. Today we are looking at possibilities of workers in the individual capacity and in their collective capacity through their unions, investing on Zimbabwe Stock Exchange. And we have a very good gentleman who is assisting us. I think this information, if we were to pay for it, we are not able to access it. So we want to always continue to thank Kudzi for the service that he has rendered to the working class for free. And we are really indebted. I don't know what happens, Kudzi. If I had invited a politician who was going to talk to workers and just give them promises, pie in the sky, we would have many workers listening, many workers asking questions, comments. But when we invite someone who is going to talk to them about how they can really be prosperous, many people in this country, they don't really follow. And many workers do not really follow some of these things about the Zimbabwe Stock Exchange. You have spoken about how it is regarded as a preserve for the elites. And for sure, it cannot be the problem of workers or citizens. There were some bottlenecks that were there. It was very difficult to access it as an individual. There was general lack of information. What has the Zimbabwe Stock Exchange done to ensure that it is accessible to all of us, people with few dollars, people with little knowledge about stocks?
Thank you on that one. So before I talk about the Zimbabwe Stock Exchange, I must also highlight that there is a regulator of capital markets, and that is the Securities and Exchange Commission of Zimbabwe. They are the regulator or the sort of the bosses of those at the Zimbabwe Stock Exchange. So as a regulator, in the past, they did not have what we call investor education. They didn't do that. As much as it was in there, if you look at the Securities and Exchange Act, it's actually one of the key mandates of the Securities and Exchange Commission to do what we call investor education. And but I'm glad now to say, since I think this year, towards the end of last year, they then engaged someone who is now doing what we call, who is now the head of investor education at the Securities and Exchange Commission, and I'm hopefully we'll start to see more activity in terms of investor education. I know they've released a book which is called Investment 101. I'm not sure if I got the name correct, but it's about investments on the capital markets, and it's a very good book. You can go on their website, www.sexim.co.zw. You can actually download that book, or you can go and buy it from them if you want. If you're one of those who want hard copy cover, you can go and get it there. But the one on the website is free. You can download it for free. So that's what the Securities and Exchange Commission has done in terms of investor education. And I've also seen them doing webinars to try and educate investors in terms of how they can invest. And then on the part of the Zimbabwe Stock Exchange itself, they've also embarked on a similar journey. And last year in June, just before the market was suspended, they introduced a new trading platform, which is called ZCTU Direct. So just to give a background, in the past, you needed to go to a stockbroker. If you were in Mutare, if you were in Bulawayo, you had to come to Harare to engage a stockbroker, or you have to email them and call them so that you can open a stockbroking account. But a lot of people did not have that information. And one of the reasons was also that stockbrokers are not allowed to advertise. So it means it remained a closed investment area for those for a very few people. But now the introduction of what I'm calling a trading platform called ZCTU Direct, which was introduced by the Zimbabwe Stock Exchange, it means that on your phone, on your laptop, you only need the internet. You can actually open an account on your phone or on your laptop. If you go to www.zcdirect.co.zw, you can actually open your account. You upload a copy of your ID, your proof of residence, as well as passport size photos and your banking details, and you're good to go. You can actually place the orders by yourself without going through a stockbroker. You can place the orders on your phone, say, I want to buy this particular company, I believe it is performing, and you buy your shares. And then your order is routed through the stockbroker, even without interaction with the stockbroker, but the system itself automatically routes your orders through a chosen stockbroker, and then you'll be able to buy shares. So this is what these are some of the initiatives that the Zimbabwe Stock Exchange, as well as the Securities and Exchange Commission have done to make sure that the gospel of investing spreads to more people.
Oh, thank you very much. And I think because of your constant education and that, I've now opened my own account, and I would want to encourage all workers around the country to look at it seriously. This morning, you posted on Twitter when we were advertising this program, and you said something that really touched my heart, and that led me to exercise my mind. You posted the hashtag, was it triple benefits? Triple your benefits, hashtag triple your benefits.
Yes.
And you were pointing out that through salary, through dividends, and through capital gains. I would want you to explain that to us workers in a layman's language. What really are you saying?
Right. Thank you on that one. So when we started this this conversation, remember you highlighted the challenges that workers are facing in terms of their salaries being eroded by inflation, and we also highlighted that as much as companies are performing, the salaries of employees are not being adjusted in line with the economic performance of the companies that the employees work for, and so on and so forth. So it means that the only benefit is a salary, which is not enough. So when I said that it's a double or triple your benefits, I'm not saying, how about as a worker, you invest on the stock market. When the company does well, as we are seeing with some of the companies now that have been releasing their results, we have seen that they are doing quite well. I know a lot of people, yes, of course, there are still challenges in our economy, but that does not mean that there are no green shoots and companies that are performing. We saw one of the biggest food processors in the country. They released their results last week, and we saw across the board, talk of all their products, there was tremendous growth. On average, 42% growth in volumes, not in revenue, just in volumes, to say this is what is happening. So we've seen that performance. And so instead of just waiting for a salary which your employer is not willing to adjust, if you had invested in some of those companies, you appreciate the value of your money. When you are paid your money, take maybe a certain portion, 5%, 10%, depending with your financial muscle and your objectives. Invest that, and then you earn a dividend. Today, I was just smiling to myself. One of the companies that is also listed, which is in the fast food business, they released their results a few days ago, and I looked at those results and said, this company is performing well. It's also diversified across the region in other African markets. Then I called my broker and said, I want to buy me these shares. And today I saw it's performing quite well. It was the top riser on the market. Then about 18% or 20%. So it's a company bought on Tuesday. Already today, it has given me a 20% return. If I choose to sell, I would have earned 20%. Subtract, I don't know whether prices went up between Tuesday and today. Whatever, I don't think prices have gone up by more than 5% between Tuesday and today. I can choose to sell. Subtract the cost of transaction and enjoy maybe a 15% increase on that money. And I know even the exchange rate has not moved between Tuesday and today. So that's a real 15% gain. If I'd invested $1,000, I would have earned $150 that I can go and enjoy myself. So this is how the market performs. You have doubled through a capital appreciation. You have doubled your income. And then this company that I'm talking about, they've also declared a dividend, which, because I'm now invested in it, I'm now eligible for that dividend, and it will also come, and I will enjoy. I don't know how much they are going to pay. I can't remember how much they are going to pay, but all the same, I think it's about 2% of my investment. So another 2% is coming to add to the capital gains that are already in the pot. So that's how the stock market works. Instead of just waiting for your salary, you now have additional income from your shares through capital gains as well as dividends.
Oh, thank you very much. So trade union is about collectivism. We don't believe much in individualism. We believe in collectivism. And what are the possibilities? Are there possibilities for workers to invest in groups through their mutual aid, through their unions? Because the Labour Act allows unions to establish mutual aids. And is that possible for people to come together and invest together as workers? And what could be the possible advantages of that?
Thank you. So it's very much possible for you to be able to do that. As I highlighted earlier on, I said when you contribute for your pensions, the pensions are also going towards investment, even on the stock market. But you can also have other avenues where you talked about those mutual funds, or you can have even investment clubs. All you need is a constitution to say, this is how we are going to contribute towards the fund, and this is how the funds are going to be distributed. I'll share with you the presentation that I had prepared. You can actually see how you can structure for the workers, how you can structure either it's an investment club or whatever it is. We already, I know a lot of people, a lot of workers, they've got their South Africa, they call them Stokvels. Here we call them probably round. And I know, like, especially female workers, they contribute towards the fund, and then at the end of the year, maybe they contribute funds and buy groceries, which they distribute at the end of the year. Using almost a similar model, you can contribute funds, right? But the beauty about it now is that there is potential, because there is risk, of course, but there is potential that instead of just getting a bar of soap at the end of the year, which you would have contributed, of course, you have managed to beat inflation, and then you distribute at the end of the year. But with if you are to invest on the stock market, there's potential and a high possibility that the 1,000 that you invested as a collective will be 1,200 or 1,500, depending on how the market would have performed, which means that you have grown your income, and you have also preserved or hedged against inflation, and you can now buy more than you could buy with your 1,000. So it's very much possible for workers to invest on the Zimbabwe Stock Exchange as a collective, even as trade unions, as long as you put structures into your constitutions. The constitution of that investment fund, you put, even if you want, you can have trustees that can handle or that can help in managing of those investment funds. But it's very much possible to do it and I can tell you that it's actually a very good initiative for workers to do that. I'll highlight, if you allow me, I can highlight some of the things that you can actually benefit if you do it as a collective. So I'm sure you're aware that government itself, they've recently what they're calling the GEM or GEM. That is an excellent example. Although it was born of government, it's a government initiative. Nothing stops workers themselves to come up with almost a similar investment vehicle, which is similar to what government has done. But in this one, you as workers, you've got control. As fellow workers, you put your structures there in place, and you have got control on where you invest your money and how your funds are distributed. Government have come up with its proposal, and that's how it is structured, and that's it. But as workers, you can come up with your own structures as well, which you think are the best to serve the needs and of workers. And then the other thing, I actually think that unions could have been investing over the years and would have been able to sponsor big activities, including class actions. Even you can actually influence as a shareholder. You can actually influence the investment direction of the companies that you are invested in. You can actually tell them, no, we don't think, because you now have a seat on the table as a shareholder, especially if you are to invest as a collective. It means that you might end up acquiring a significant stake on of a company, of a listed company, where you now you'll be given, and you're supposed to be given probably a seat on the board, where you can now influence decision making. Even if you don't get a seat on the board, you now have the right to attend their annual general meetings and also vote and also suggest during those meetings to say this is what we think should be happening at the company. This is the direction that we think the company should be taking. All those benefits will come if you invest either as individuals or as a collective. There are also other benefits that are there. When you get your salary, you pay payee, but when you invest, the taxes that are there, I think the total charges for investing on the stock market, it's about 4.23%. Actually, it's 4.136%, but 4.1%. Those are the taxes that you get charged. But when you earn your salary, you pay as you earn, which is, I think, it's way higher than the 4% that I'm talking about. So those are some of the benefits that you can actually enjoy as employees if you are to invest on the stock market.
Oh, wonderful. And this is quite insightful and valuable in terms of the advantages that workers have. And I particularly like the two issues more. Of course, all of them are important. You have introduced the issue of investment clubs. We are always doing the rounds. We already have in some unions savings and credit schemes. But our major challenge has been where to invest. We were not aware of these other avenues. We thought we are too small. And these are things that we can do. In this country, most workers have no unemployment insurance. So we also face many challenges as trade unions when someone is dismissed, retrenched, or something happens to someone, their families come to the union, can you do something? Someone will not even have money for relocation. So we think that some of these ideas you are bringing are very critical in solving some of the challenges that we already face. But you talk about building resources for class action, and you are correct, because for a trade union to be strong, we need membership, but we also need the financial muscle. Many times we've got the voices, we've got the feet on the ground, but we don't have the financial resources either to pursue litigation or to build an advocacy strategy that is strong, or even to go for strike, because you need to pay the workers who are on strike, because there's a principle of no work, no pay. So we don't have a strike fund. And these ideas that you've brought are making sense to us. We've been facing these challenges, but without a solution. But let's go to shareholder activism that you pointed out. If we are able to buy such significant shares, maybe 10% of a big corporate, and we are able to get into the AGM, what are the rights of shareholders in a company?
Well, thank you for that question. So as shareholders, you have the right to receive information pertaining to how the company is being run, how it is performing. I know if it's a public listed company, that information, obviously, in most cases, it comes out in newspapers in terms of the financial results, the notices to annual general meetings. But when you see those notices, it's actually you, the shareholder. Why? That's the reason why they're actually putting those financial results in newspapers. putting those notice for AGMs, as well as cautionary statements, as well as trading updates. They are doing it for shareholders. That's the primary reason why you see those in the paper. It's the right of shareholders to receive that information. So in the past, the newspaper was the best way or cheaper way to reach to every shareholder. Although now, because of technology, you are supposed to get, if you are a shareholder, if you have bought into a company, and you are a shareholder, you have got the right to receive that information in your email. They have to send it direct. Even after publishing it in the newspaper, after putting it on the website, they must send you an email to say these are the financial results because you are a shareholder. That's number one. Number two, you go to the AGM, you have got the right to vote. Of course, there are my company law is eluding me, but the statutes of the Commons Act, they've changed the name. I'm sure it's COBE these days. It's a new one, but the Commons Act allows shareholders to also vote at those AGMs, and there are rules and regulations that are followed that you are expected to know as you buy into a share. You are expected to know. To say if it's an annual general meeting, how much, what percentage of the shareholding is needed to pass a vote. Some they just say a majority, which means 51%, and then the vote is done. Some are special resolutions where they say we need at least 75%. Some they would say because this one is an interested party, they are not supposed to vote. And then, for example, if the directors who have made a proposal, they might have to recuse themselves and not vote, then allow the minority shareholders to vote on a decision. So all that information, and you're supposed to get that. And then it's also your right to get the dividends of if the company declares a dividend. It doesn't matter you own 1 share, you own 100 shares, you own 1,000,000 shares. Everybody get a dividend according to the shares that they have. If they say we are going to pay $1 per dividend, you get according to the number of shares that you own. So there is that equality of saying if you're a 10% shareholder, you also get what is in line with your 10% shareholding. The only disadvantage is when you invest in a company, for example, where the majority shareholder already owns, let's say, 75%, and the above 75%. And when you vote with your 10%, when it comes to voting, you vote no, but the one with 75%, it says yes. Obviously, yes carries the vote, just like what happens elsewhere. But still, as long as you are organized, I know for a fact that when companies are making decisions, especially big decisions, they approach the major shareholders. Whether you are a major shareholder with 10%, 5%, they normally approach those with 5%, 10% to say, guys, this is what we are planning to do. What do you think? Before it comes to the AGM. So they will give you a voice to say, you have got a 5% shareholding in the company, a 10% shareholding. This is what we are planning to do. Would you support this initiative? And obviously, you can then look at it as well and say, no, go ahead, or we don't think it's right. Why don't you adjust here and there? So this is the voice. And you have a right again to also cause for the calling of an AGM to say, this issue is pertinent. Can we have an EGM on that particular issue? So there are so many other rights that are given once you are a shareholder of a company.
Well, thank you very much. And I think it's coming out clearer. And for the working class, we are a very big block. And despite the challenges that we are facing, we earn a regular income. And if we put it together, we can really invest and control some of these entities. I was thinking aloud and saying, so if you are invested in Delta, for example, whenever you are sipping the wise waters, the so-called wise waters, you know that you are going to gain something out of it again. It's a form of saving. If you are invested when you are pushing your trolley, all the other customers are just putting money into but you know that you are also going to get some return in it. And I really like the points that you clearly and simply, you simplified it for us raised about the rights of investors and the possibilities of trade unions to control decisions, to influence decisions, even if they are not the majority shareholders. Obviously, if you are a shareholder and you speak in an AGM, the other shareholders will have to listen to you. They may differ with you, but they have to listen to you. And I think that is a very important opportunity. And I want to really thank you for this. I know we haven't touched the most important of the very difficult concepts. You have spoken about the CSD, the SCCZ. You have spoken about a lot of issues that we still need to discuss. And with your good hearts, would really want to call you again on the worker dialogue. But you're cutting short to the workers who are still doubting, to the trade union leaders who are still confused. Are there ways where, as unions or in our groups, we can get specialists to assist in terms of the investment decision? This is a complex thing for us. We are venturing into it. Is it possible? Are there people who work to give that advice? And what is your parting shot? What is your last word to the working class?
Thank you. So the first thing I would want to say is that investing is for everybody. No one should be left behind. If you are a worker and you are contributing towards a pension fund, if you are contributing towards your medical aid, your insurance, and so on and so forth, the funds that you are, or the premiums and subscriptions that you are contributing, they are going towards the bulk of those funds, because of the limited options in Zimbabwe. The bulk of those funds are going on the Zimbabwe Stock Exchange. So if your money is going towards that market, you might as well see other opportunities that are also there on that market, and also invest on your individual capacity as well as a collective, as unions. You might even do it better than what your pension funds are doing. And then so everybody must be able to put something, because there will come a time where you are not able to work. And we have seen what has been happening with pension payouts from institutions such as NASA. It hasn't been enough for the worker. But if you have been doing it for yourself, then you can use those resources to add or to supplement your pensions that is coming from institutions such as NASA. And then in terms of help, yes, there are institutions that are called asset management companies that are there to give advice, or even to do it on your behalf, in terms of doing the research for you, making recommendations to say, given the profile of and the structure of your union, this is what we can recommend. These are the assets that we recommend to you. We have looked at the profile and structure of the people that are in your union, and this is what we think is suitable. They are called asset management companies, and they are licensed and regulated by the Securities and Exchange Commission. If you go to their website, you get contact details for those asset management companies. Even your pension funds, most of your pension funds, they also go through those asset management companies, unless they've got an in-house fund manager. Otherwise, most of them, even those with in-house fund managers, they want to diversify, so they've got funds that they manage themselves, and then some of that they outsource to asset management companies. So you can get contact details on the Securities and Exchange Commission website, as well as contact details for stockbrokers. They are also there on the Securities and Exchange Commission's website. And then there are others who are just financial advisors. You just go to them and say, can you structure a plan for us? This is what we are trying to do. We want to have want to invest on the Zimbabwe Stock Exchange. Can you help us structure the vehicle that we want to use? And they can do it for you, of course, for a charge. But the biggest investment you can make is what we have done now, which is getting knowledge and information. And it's the same. You go, it's free of charge to get information. Then when you want to make deals, that's when you have to pay. But there are people who are ready to assist and make it possible.
Thank you very much.
As a parting shot, As a parting shot, I just want to thank the workers for allowing me to speak to them. I'm passionate about the investment journey because I've seen what has happened to our parents in terms of what they get from after they retire. They've got no source of income, but if you start investing through the years, you'll be able to live comfortably even after retirement.
Thank you very much. And this is the knowledge that we have always been given by our parents in a different way. We've been always asked to buy a car and wait until the rainy days and you get shelter or financial cover from your head. And this is quite important. And I want to thank Kudzanai Sharara for this important engagement, and hopefully that it will make a difference to the working class. And for the workers, this is where we are. Things are not looking well, but there are still opportunities. And this is the reason why all trade unions are supposed to be negotiating and bargaining for employee share ownership schemes. You've heard how important it is. We can triple our benefits through salary, dividends, and then capital gains. We also wish to advise workers to ensure that they invest in their individual capacities and also as collective, so that we ensure that our lives are changed for the better. Thank you very much. This program was brought to you by the Zimbabwe Congress of Trade Unions in collaboration with Zimbabwe Daily, Zim Daily, your favorite platform. And we are thankful to the technical team. Yvonne, thank you very much for this. If you had Comrade Raymond Majongwe's song, we could end on that note. And this is one avenue of ensuring that we reduce the widening income gap between wages and profits. Thank you. May God bless you all.
Kana